GameStop just tried to buy eBay for $55 billion. GameStop just made a move on eBay. At the time of this video, GameStop is at $32 a share and eBay at $68 a share. So here's the real question. How does the smaller company buy the bigger one without blowing itself up? So on May 3rd, 2026, GameStop dropped an unsolicited offer, $125 per eBay share. The total valuation, $55.5 billion. And eBay's response? Cold. We have no prior decisions. Translation? You didn't even ask. We didn't even say yes. This isn't a deal. It's a power move. GameStop's plan looks clean on paper. 50% cash, 50% stock. Funding? $9.4 billion in cash and up to $20 billion in TD securities. It sounds solid until you realize that still doesn't fully cover the $55.5 billion valuation. So now the story changes. GameStop is trying to acquire a company nearly 3 times its size. This isn't normal. It's like a mid-tier company trying to swallow a giant. It doesn't make sense, and the market reacted instantly. eBay's going up, GameStop down, because investors saw it immediately. This doesn't add up. Well, at the center of all is Ryan Cohen. GameStop says he'll be running the combined company. To be fair, he turned GameStop around from $381 million loss to a $418 million profit. Slash cost, clean the balance sheets. So the bull case is simple. He fixed GameStop, he can fix eBay. But here's the problem. Cutting costs and running a global marketplace, two different things. GameStop's plan is aggressive. Cut $2 billion in annual costs. Boost EPS from $4.26 to $7.79 in 1 year. How? Well, slash $1.2 billion in marketing, cut products development, and reduce overhead. Here's the wild part. They want to turn 1,600 GameStop stores into eBay fulfillment centers, authentication hubs, and live shopping locations. They're trying to build a physical and digital commerce empire. Now let's talk risk, because this is where it gets serious. Financing gap. The math isn't fully there. Massive dilution, meaning more stocks equals to weaker shareholders. Or eBay can just say no to the deal and walk away. Regulator steps in. This deal gets scrutinized hard. Execution? It's a nightmare. Integrating these two companies are insanely complex. This isn't just risky, it's broadline chaotic. So what is this really? A real $55 billion takeover attempt, or a strategic pressure play to shake up eBay? Because eBay basically responded with, come back when this is serious. This isn't just a deal, it's a credibility test. For GameStop, for Ryan Cohen, and for the entire meme stock era. Because if this works, it's one of the craziest corporate turnarounds ever. But if it fails, it proves something bigger. There are limits to hype. So what do you think? A genius move or an absolute madness?
Thanks for watching. If you made it this far, hit the like, drop your thoughts in the comments, and follow for more breakdowns like this.